This Quick Tech Chats episode is brought to you in association with Zimbabwe Investment Tour 2019. Now, ZIT 2019 is a carefully curated insight, mission, and transactional opportunity for discerning investors who view Africa as the next frontier for high-growth investment. ZIT 2019 is set to take place in Zimbabwe's capital, Harare, in September 2019. Now, the event will attract serious regional and international investors who have a keen interest in sourcing actionable insight about Zimbabwe, making important high-level connections, and most importantly, doing deals with pre-vetted investment-ready companies, asset managers, and government authorities in the new Zimbabwe. Now, for the moment, this is just a heads up. More details about how you can be part of the event will be revealed in the coming weeks and months. But in the meantime, head over to ZimbabweInvestmentTours.com and subscribe for the newsletter. And of course, it's probably a plan for you to follow them on social. On Twitter, it's @InvestmentTours. On Facebook, it's facebook.com/Zimbabwe Investment Tours. And on LinkedIn, just search for Zimbabwe Investment Tours and follow them there. And now, here's the second and final part of an insight-filled conversation I had with one of Zimbabwe's most well-known and well-respected business people, the economist turned banker, entrepreneur, and investor, Dr. Nigel Chanakira. In this installment, Dr. Nigel shares entrepreneurial wisdom around commercializing market-relevant tech and innovation, and he explains why he remains pragmatically bullish about Zimbabwe's investment prospects. That's all next. Enjoy. My notion is not enough people think with a long enough view. And we were discussing off mic before my sort of concern that I might have, as you put it, a jaundiced view of the prospects economically, socially, spiritually even for a country like Zimbabwe, perhaps because I'm born here and this is my country and my home, but also just because I might be susceptible to bias for many other reasons. So that sort of declared, I do sense that we need more people who think like you in the inordinate stretches of time that you seem to be able to accommodate in waiting patiently for investments to start to yield, bets you've made to start to deliver. I mean, with the exception of this Econet story you've told, yours is a story literally of patience, shunning the road, the path of least resistance for what appears to many as one of the hardest ways to make money on the continent, i.e. invest wholeheartedly in investments in Zimbabwe, of all places, in the Southern African region. So what would you say to diasporans like myself with modest sort of disposable income and expertise that might be useful here? High net worth individuals, investment professionals in the sort of VC and PE scenes, anyone who's sort of Africa focused who's been sleeping on Zimbabwe, and maybe because they don't have the long-term view required to actually succeed and see things through.
Well, clearly, I think it's looking at entrepreneurs with staying power, looking for entrepreneurs with focus who can ride this lion that is called Zimbabwe. It's like riding a tiger, essentially. It's not meant to be ridden because, if it throws you off, it's going to tear you apart, as it were. And so that, I think, is my prognosis of Zimbabwe, in the sense that you want to select carefully people who are in it for the long haul, because it's needed patience to yield any meaningful results. It can be hazardous along the way, and we've got many that have fallen by the wayside. And so that due diligence in terms of character, in terms of people who are focused on an industry and can grow with the industry, that are, for example, technology focused, and stay on track with global trends and bring those back home. It certainly pays. If you look at the banks that have been able to weather the storm in Zimbabwe, they've been savvy enough, to survive and make lots of money. And so clearly it's not a normal quarterly play. This is not a game for, your normal investors who want quarterly returns or half-year returns. This has got to be patient capital, in a very volatile environment. And you want to be participating as well, with those entrepreneurs to see what they see. and to see how they can weather the storms that seem to frequently hit nations like Zimbabwe. But those who can understand the environments, that can understand global trends, and then be able to show a return and grow a business despite and in spite, those volatilities that exist, are ultimately your winners. And you win big time. So it's high risk and truly high returns, for those who have the staying power.
I've been speaking to some entrepreneurs over the last couple of days here in Harare, and a lot of them, of course, exposed individuals privileged to have lived abroad or studied abroad, observed global trends that might have relevance in our market, and of course they're throwing themselves to startup efforts and SME efforts to try and solve for Zimbabwean problems. But I am observing a worrying trend towards over-optimizing solutions at the expense of market relevance and even commercial viability. This is something someone like Strive My CEO, seem to have been able to avoid. Give me a sense of how you frame market relevance and then sort of packaging investable business vehicles for a market like this, given how technically it's not unreasonable to want Zimbabwe to be Wakanda, and the cutting edge place that we know it can be. So give me a sense of how you think about that.
Okay, let me give you an example. Our bank pioneered cell phone banking in Zim. Cell phone banking is a concept that I came across in Nigeria. So I went across to an Econet board meeting in Nigeria as just a support guy, to Strive and his efforts. And then came across a guy, Valentine Obi, who basically was one of the entrepreneurs who came up with the concept. And it's an idea whose time clearly had not yet come. And I immediately brought that idea back. This is as far back as 1998. And we fiddled around with this thing until it started to make sense. The uptake was very slow. But at the back of my mind, I think, was the discipline that people don't know what they need. They don't know what they don't know. And so as a result, that gap in terms of knowledge by lack of exposure and thought is really what you are then pursuing. And you are tweaking that model, for relevance in Zimbabwe. And clearly we ran on with that idea, and for many a year we were stuck at a client base of 3,000 before we made a quantum leap to 30,000. And then within a very short space of time we had the largest mobile banking unit at about 300,000 customers. And ultimately, I got out of that space when I got out of banking. Econet went on to then, get M-Pesa. M-Pesa had come through. It was a proven model. And, they looked around, observed, tweaked it further. And then, came EcoCash. And that's been a blockbuster, within itself. So clearly there is the discipline and the tweaking that becomes relevant. And then the education and teaching of the market to tell them, of the convenience that they are yet to find out. And once, of course, that, part of discovery is made, it becomes contagious. And so it almost self-markets.
I mean, you mentioned M-Pesa and you mentioned EcoCash, both products which certainly not tech at its most cutting edge. And that's what people seem to forget, that you don't necessarily need the most cutting edge thing to work. And how do you balance the desire to take people where they've never been, but also the discipline to not innovate for the sake of doing so, or for the sake of kudos?
By observation, certainly in terms of what I've observed, it's really been the discipline of bullying a project through, guarding it jealously, whilst letting, the young minds and people who are in charge of those units, fiddle with these technologies, yet reminding them always that it's not just the thrill of technology, that we are chasing, we are at the end of the day a commercial entity that needs to speak, to viability. And so I think that discipline of giving them the latitude to explore, whilst at the same time, waving the stick that reminds them that this has got to be sustainable and that at some point in time you'll pull the plug. I think, what one has to appreciate, Andile, is a lot of the corpses don't hit the headlines. So there's quite a number of things as well that we've tried and entrepreneurs try. And we've packed our bags and dusted ourselves and said, well, that didn't work. But what do we draw from it as an experience? And so there are, apps, there are products that we've thought would really take off and then realized perhaps its time is not right. And so we've pulled, things off the shelf, not always permanently. I mean, I have an app I'm fiddling with right now in terms of financial literacy, which is an area I'm passionate about. And, we've been at that now for 5 years, and it hasn't built a traction. But this is what, every individual needs.
What's it called?
Cash flow optimizer. And so, we're moving into the stage now of gamification, of giving it out for free. But, this was going to be the next, billion-dollar idea, for me. But it's 5 years in play, and we still haven't hit traction. And yet, as a guy, it's a great product that needs more play. So what we've done, for example, in that particular play is you feed this thing, it starts to consume more cash and more resources than you actually budgeted for. And then you realize, of course, that you've got to change the players. And so we've been at it for too long, perhaps. The core remains, very good. The idea, we think, is a winner. But we've just recently appointed a new CEO, to run with it. And so that fresh injection of blood, we sense, is what's likely to take it, to the next stage, where we thought we would deliver. This young guy's got to take it forward.
I like that. I hope our listeners are enjoying the sort of peek inside your mind where the banker meets innovator, meets entrepreneur, meets sort of disciplined investor. And I just think it's a really fascinating place. I wish we had more time. But for the purpose of the time we have left, you mentioned corpses. You saw fit to sell Kingdom at some point. This current obsession with the exit that we see investors have, not just on the continent, but everywhere in Silicon Valley, really all over the world, this exit centricity, as they call it. It sort of baffles me, given how if something's doing really well, why would you ever, why would you let it go? You'd be nuts to sort of sell Amazon or sell Econet when you know that even at its current peak, a business like Econet is only sort of like the tip of the iceberg in terms of its potential and what it could be. So from that standpoint, one might ask you, like, how does a business like Kingdom ever become the kind of business you would sell? And then maybe that could also be paired with another famous story about you merging with the Thomas Meikle group, I think it was called. For those who aren't familiar with that group, it's effectively like a young black entrepreneur finessing their way to a partnership with the Oppenheimer family or Johann Rupert or something of that nature. And there you are with this bank courting what is a 100-year-old business. And again, these are all things in your rear view mirror at this point. So, join the dots for us.
Well, my fundamental philosophy in business has really been built on 4 pillars. Firstly, I'm a Christian, unashamedly. I want to do a business that glorifies God. In everything that we're doing, I would like to see that business let God's light shine. Secondly, it's got to be fun. That's a fundamental issue. Thirdly, we want to make money, and we want to make lots of it, in as good a time as we can. So we must be competitive. And finally, I want to be a service, to my consumers. And so based on those principles, I think if I look at the Kingdom story and the Kingdom Mikkels Africa story, I look at it and I say to myself, was it glorifying God, when partners begin to squabble? No, it's not the picture that, I would want to paint. Was it fun? Hell no, it wasn't. We were in the papers for the wrong reasons.
You even made your way to a cell like twice because of things you'd written in your column.
Oh, yeah. So clearly, the pains that come with that just are not worth it. Were they making money? At the time, certainly, they were making money, but the prospects didn't look good.
Oh, yes, because of the time. What year was this?
Well, if I look at Afro-Asia Kingdom, that was 2013.
Afro-Asia, a Mauritian outfit?
Yes, and that's who I partnered with, Kingdom, and then sold in 2013 and exited banking altogether. And then with Kingdom Mikkels, 2008 is when we did the merger. And then by 2010 is when I made the exit. So yes, making money, and clearly you want to get out while you still can. And I think in both businesses I've been able to, get out whilst there was still money on the table. And so from that perspective, if the businesses don't fit those criteria, as a serial entrepreneur, there are other businesses to do that would, meet my criteria. And so from that perspective, I clearly sought to move on. So I moved on, went into mentorship, which I love, went into private equity and fiddle around with technologies as I did with phones in private equity, and then also with the apps. And so I'm having the time of my life. I can also then engage, mentor people, train, invest, and then do philanthropic work, like with the churches I'm doing, and have the time to do so.
So I have two last questions. I read somewhere that Kingdom will be folded up finally. I don't know if that's true. And I wonder how you think about the level of sentiment some people have around their investments, and how you for yourself frame your role in engaging with new things. How much of yourself do you see fit to infuse in things going forward? Does it hurt when you see things you left behind sort of unwind? Or is it like a pragmatic, that was then, this is now?
Well, look, I think from a commercial standpoint, and you being a businessman would understand this, that a business is something that you can found, but you can't, in my view, get too sentimental about. In the sense that, if you are too sentimental, you then don't make the right business decisions. Afro-Asia Kingdom, as it was then known, was a merger of what was in my DNA and what was in Afro-Asia. What we then created was Afro-Asia Zimbabwe, in terms of the banking entity. And I sold to Afro-Asia. And so clearly on the 5th of September 2013, I had to, look back at the 15 odd years, that I had been in business. Was it 15? It's actually 94 plus 19 years.
And 1,000 odd people working for you?
Yes. And I had to make that call. Did I want to move on with my life independent of that or not? And I made the call. And clearly, obviously, those and banking becomes very, difficult. It's not like selling any other business, because a lot has to do with reputation. A lot of the shareholders, all 6,000, some didn't know I sold, although it was in the press and, And when the bank then collapsed, subsequently, when Afro-Asia Bank, Zim, collapsed some 18 months after I had left, I left on the pretext that they wanted to raise more money and they felt they could raise more capital without me. And they, felt very strongly that my ideas, were kind of old school and they wanted to take the bank in a different direction. So clearly, short of buying it back, I was not in a space where I could, flourish in terms of my entrepreneurial acumen. And so from that perspective, I had no space. I was not part of management. I was a non-executive director. So I couldn't influence it, in the direction that I wanted. And that was more painful for me to watch, as a shareholder and as a board member. And so it was the right thing to do and leave. Now, obviously, the sentiments then follow you, because once it does collapse, people still go back and say, well, I had my deposits there because of your name. But I mean, the reality, Andile, is when I left,
your name left with you.
Exactly. So, I mean, so in a sense, I will always meet a depositor with that, and I empathize with them. But, there it is. That's the reality. And similarly, when I look back at the Meikles situation, great business, and we could have taken that business places. But once again, if, the CEO, as I was, gets into a tiff with the chairman and, a 42% shareholder, then, I got no space in there.
The grass has no chance.
Oh, yeah. So clearly, again, the wounds, are there. And sadly, in both cases, when I left, things just seemed to deteriorate and get a whole lot worse. The share prices never recovered. The profitability, the dividend payments history, which, had become associated with me. So again, people look back and say, well, if you had stayed, what could have been? But the reality, Andile, is, there comes a point in time when a businessman has to make the call. Am I adding value, or am I really just destroying value by staying and, agonizing over it? So, yeah, I think one has to be hard-nosed about it and say it's done and look on to the next chapter. What can I build? How can I add value? And clearly, I'm doing that, but less so now, under the spotlight of publicly listed companies. And, I enjoy the peace of that and empathize, with the carnage that clearly the blood that's still on the streets as a result of those.
So my final question to you is there a question I haven't asked? And really, I've got I have a bunch. So I'm really just needing to rein myself in the hopes that at some point in the future we'll get to talk again. And certainly I anticipate the response to this conversation is going to yield even more questions about Zimbabwe, which is really part of the point here, which is, Zimbabwe is popping. It's a tough place, but it has a resilience that very few places in the world can match, and people need to be paying more attention. That said, is there a question I haven't asked that you wish I had?
Perhaps, my question is, Zimbabwe, what's in it for Zim? And for me, I think the opportunities are still here. I think the future is still brighter than a lot of people actually anticipate. What we're going through is I think, temporary. I think it can only make us stronger. And I would argue and postulate that a business or businessmen, businesswomen who've been able to weather the storm in Zimbabwe can probably run a business anywhere else, in the world, in the sense of, when turbulent times come, they will be able to resist and probably, sustain themselves through. The opportunities are here. I think the future is bright. The authorities obviously need to sort out quite a few things, but for any serious entrepreneur, you cannot afford to neglect Zimbabwe.
And this coming from a gentleman with investment interests around the world, who frankly boggles the minds of many when they realize you could live anywhere you like. I mean, you have a home in South Africa, you spend a lot of time in the US, but you choose to make Harare home base for the vast majority of your time in any given year. And so coming from you, I think that's saying a lot. We haven't had the opportunity to talk about some of the specific PE plays that you're involved with. some of the interesting VC plays that you've administered, overseen in the startup space. Really interesting things that I no doubt will require us to speak again. And so all of that to say, him or her, who has ears, let him or her hear.
Thanks, Andile, for the opportunity. And I would be available certainly to talk about the future of this great country and continent. Thank you.
Thank you.